Hey, everybody, welcome, welcome, welcome. We're so excited to have you here. We have our amazing Nathan Turner to speak to us all the way from Canada. And it'll be fun to hear what he has to say. You know, he is just an amazing note buyer, and he really likes to teach people about buying their notes. And he also has I guess you call it a summit every year.
Yeah.
He has that available. And there's about Nathan, and then there's about us. We are working with passive investors right now. We have four multifamilies that are looking for some money so they can close, and we have one self-storage ground up build. Two of our two of our deals are actually in Atlanta. One's a multifamily and one's the ground up build self-storage. Then we have one in Tennessee, 620 units, 84 units in the Indianapolis area. And we have one other, I said Tennessee, right? Oh, in Tucson. We have a small one in Tucson. They're just looking for the capital. They've already closed. And if you're interested in doing a 1031, most of our sponsors are happy to have you come in like that. So thank you for that, our little advertisement. And also a mastermind's now available for 6 months about teaching you about money, the time value of money, and how to invest in real estate. And Nathan, we'll include notes in that because as far as we're concerned, that's investing in real estate. So
Yep.
maybe we'll ask you to come and speak to our group so that they
Yeah,
can
I'd love to.
learn more about that. That would be fun.
Yeah.
Anyway, get a hold of me if you're interested in setting up that. We work with multi-generational families, and we also work with the individual. And we do this because most parents never teach us anything about money, and we have to figure it out on our own. And then by the time we learn, we've lost that time value of money.
Hmm.
That's a whole nother subject. So here we go. Nathan Turner is the owner and
Yes.
president of Ernest Inc. He started investing in the United States real estate market in 2008 by creating notes. It eventually evolved by buying performing and non-performing notes well below market value. Yay, make your profit going in. Over the years, he has been involved in all facets of the note business. One of Nathan's favorite things about the note business is helping struggling homeowners by modifying their loan or making it disappear. Oh, we got to hear about making it disappear. After several years in the business, Nathan now works with accredited investors to buy notes. He's also the host of Diversified Mortgage Expo, where everyone from newbies to experts can come together to discuss, learn, and have fun. Having studied business management at the University of Lethbridge and working part time in construction and painting, Nathan put the two together to start Flippin' Fantastic as a house flipper. Flippin' Fantastic has evolved into Ernest Inc. Working in various aspects of real estate over the years, Nathan now concentrates on purchasing non-performing notes in the United States. Doing this gives him much more flexibility by owning the paper, not the house. Nathan can effectively control the house without ever owning the real estate. And Nathan, many people are very interested in this because they get very frustrated when they have to take care of the tenants and collecting money and doing all of that. So thank you very
Yeah.
much for being here today. Please take it away.
Awesome. Thank you so much for having me here. This is always good. I was like hanging out with Peggy and just learning from her. She's awesome. So
Thank you.
yeah, I've been doing this for a little while and I think it was that my LinkedIn intro or where'd that one come from? Because that it needs a little updating.
That's it. Okay. I don't know. Maybe from a time before.
Maybe.
We'll just pull your old stuff and put it in newly.
Good enough. That's all right. It's still pretty accurate. It's still pretty good. But yeah, I guess the biggest adjustment to that is we're mostly buying performing notes these days,
Mm.
which is just a little bit different, but it's still that much more fun. It's really good, and doing that in our fund. So let me start my screen here, and then I will get on with this presentation business. Okay. So this is a presentation that I just put this one together just over the last week, and called it "What Could Possibly Go Wrong?" Talking about doing due diligence from a distance, um, because you've got to make sure you know what you're doing before you get into something. So let's go with a little intro. Peggy already introduced myself, so I'll kind of forego that, but that's me. I got started in notes in 2009 and have been buying notes and selling notes and creating notes and doing everything with notes for the last 15 years. And I just think it's the most fun thing there is. As she mentioned, I'm from Canada. So there's that added pressure to be able to get it all right because everything I do is in the US. Um, and so I don't ever see these properties, I don't ever visit them. So everything's done at a distance, and that there is a way to do that, and you can do that very successfully. The latest thing that we did just this last year, we put together Earnest Investing. That's our passive investment fund, and also took over the conference, the Diversified Mortgage Expo, which is a place where, yeah, people come together, network, learn, grow, and just come together, everything all about notes. So what could possibly go wrong? I think all too often, if you hear a presentation or you see a video or something like that about note investing, it sounds really rosy, and it sounds like nothing ever goes wrong in note investing. Everything's dandy, and there's nothing is ever a challenge. So I'm here to kind of challenge that a little bit and talk about some of the things that can go wrong and do go wrong, and then how to make sure that you don't fall into any of those traps. So number one, any note that we're buying is always backed by real estate. In my case, I always look at residential real estate. Yes, you can do commercial. Yes, you can do land. You can do all kinds of different things, but I concentrate on residential property. One thing that can go wrong, and then we'll get into some of the corrections, some things you can prevent, is sometimes it can be like this, where you think the house is there, you've done some online research, and the house looks great. And then later on, you find out that maybe a truck came by and picked it up and left, and there's no more house there. So that drastically reduces the value of your note, because now the collateral value is significantly less. And can that happen? Yes, absolutely it can. And has it happened? Yes, I have seen that happen. So we'll get into how do you prevent that in a minute here. Documentation. So when we're talking about notes, we're talking about buying paper. That it's backed by the real estate, but really what we're buying is paper. So there can be a situation where you're buying the paper, and let's say there's a default and the person quits paying, or they passed away, if something happens, and now you've got to go to a foreclosure. It can absolutely happen where you go to the foreclosure and the judge looks at the documentation and says, this doesn't make any sense. You're missing assignments. You're missing all kinds of information in here to have this foreclosure even be able to happen. So can that happen? Yes, it can, where you're prevented from even going ahead with foreclosure and you don't have what you think you have. And in that case, you can lose everything. So it can be a very serious thing. What else? Liens. Just because, so my preference is to buy first lien mortgages. Anything that's first lien against the property, that's my bread and butter. That's the thing that I look for. Just because I'm in first position doesn't necessarily mean that I come first, which sounds a little bit counterintuitive, but it can happen. Things like a municipal lien, utility liens, state liens, things like that can supersede first position mortgages. In some cases, an HOA lien can supersede your first lien mortgage. So understanding what liens are out there, that's a big deal. Borrowers, it can very much happen where you get stuck with the bottom of the barrel borrower, where either they're not paying or they're not paying regularly, or even worse, they cause problems. They start complaining about this and that, and they're not making a payment, but then rather than just going with the system and leaving the property the way that they should, they can start throwing in these objections. They can destroy the house. They can do all kinds of things to the property because you started out with a bottom of the barrel borrower. So how to avoid that. And then timelines. Not every place is created equal. So again, in that worst case scenario where we're going to have to go and foreclose, you get in and the numbers looked all great on this loan that you purchased, and it looks fine until there's a default, and now you've got to go to a foreclosure, and all of a sudden you find out that in that state a foreclosure takes 2.5, 3 years to complete. Not because there's an objection, not because there's any problems, it's just because the state is that slow. So on that graph there with the dollar sign and the thing going up, that's not your profit, that's your expenses. So that can happen, and that gets very, very expensive. And again, on all of these examples, ask me how I know. I've made plenty of mistakes and done all kinds of things wrong. So I wanted to go over, how do you prevent these things? How do you make sure that you're not stuck with any of these challenges? Number one, locals. Like I said, I'm from Canada. I never visit any of these houses. There's been one time in the last 15 years that I went and saw one of the properties, only because it happened to be very close to Niagara Falls, where me and my family were visiting. I was like 20 minutes away, and I thought, hey, it would be kind of fun to go and see this house on this mortgage we bought. So I did it for fun, but otherwise, I never go and look at any of these properties. It's not something that I am required to do, and it's expensive and time consuming, and it's just not worth my time or energy. But there are local people that can go out and look at that. Typically, I use realtors, and I have them go out and tell me their expert opinion on what the value of the property is. Not just a BPO, but then most often I will follow up and say, okay, can you back that up? Can you tell me why you think that house is worth what you think it's worth? Whether that's higher or lower than what I was expecting, I just want to understand what's going on. And I'm not trying to change their mind. I just need to understand the background of it. So depending on and using local people to go out and actually lay eyes on the property, make sure it still exists, and make sure that there's the value there that you think there's there. Read. So we've got that set of collateral documents. So that's the paper that you're purchasing. You are going to have to read it, either you or somebody else, but somebody needs to look through and make sure that all of the documents that need to be there are there. It happens all the time where you will buy a note and there will be a missing assignment or a missing an allonge. And these are the transfer documents that convey the right to receive payments from one owner of the note to the next. So if any of those are missing, that can create major issues for you going forward. If the language of the note is wrong, that can create major issues if you go into foreclosure and the judge says, well, it says right here, it contradicts itself, and therefore foreclosure is tossed out and you're out of luck. So make sure either you or somebody who knows what they're doing is reading through those documents and knows what they're looking for, what should be there or needs to be there. Title. I have had this in the past where I've got these title reports. So the way they prevent any surprises, first of all, you get a title report, and it doesn't need to be an extensive title report. It can just be a title search, but more than 99% of the time, that's going to have all the information you need on there. It'll list any other liens on there. So like a tax lien, state liens, utility liens, sewer liens, all those kinds of things, that comes before a first. So if there is a $6,000, see if I have a copy of it over here. If there's a $6,000 water lien attached to that property, that does not go away with a foreclosure. So make sure you understand that and you're at least prepared for it. It's not necessarily a deal breaker, but you need to understand what's there and what matters and what doesn't. And again, if that's not you reading through that, you can have an attorney or a servicer read through that and help you figure out what the important things are, or the title company, the one you order the title through, they can help walk through that and make sure you understand what's there and what's not, and what's supersedes your position in first or second or whatever you happen to be purchasing. Servicers are just a wealth of information and knowledge. I very often, not every single time, but most times when I'm buying a note, I want to know what the relationship with that borrower has been. And the way that I can find that out is I use the servicer notes. So anytime the servicer has had any conversation with, or any contact with, or any attempted contact with the borrower, they make a record of that. And they can make that available to me as a note buyer before I buy the note. So I can read through and see what has happened, what kind of conversations have they had, what kind of conversations have they not had. Has the servicer tried calling 50 times and nobody's ever answered the phone? All of that is in there. And that's really essential information for somebody that I'm going to have a relationship for potentially 20 or 30 years. So I want to make sure I understand who they are and what kind of issues there have been in the past, if that's something that I want to get into. The other thing is asking if you're talking about a seller finance note and there hasn't been a servicer to this point, the question in that case is to ask the seller, the one who now owns the property and sold it on terms, how did you find your borrower? Was it through a Craigslist ad? Was it somebody you met at the grocery store? Is this a family member? How do you know this person? What kind of relationship have you had in the past? Hopefully they're being honest and will tell you what's been happening and who that person is. Again, this is potentially a 20, 30-year relationship you have with the person in the house. So you want to make sure you understand who they are and what you can expect going forward. And then attorneys. Every state is a little bit different when you're talking about a foreclosure. And again, this is always the worst case scenario. If there's somebody still living in the house, we can almost always avoid a foreclosure. But if the case comes up where we do need to do a foreclosure, I want to make sure I understand the process for that state and sometimes even for that county. So the 2.5 year, 3 year foreclosure, New York all the way. And why? I don't know. There's no reason for it to take that long, but it just does. Versus the process in Texas is so much faster. On paper, if you're doing everything right, you can complete one in 2 months. The fastest I've ever been able to do it in Texas is 4, but that's a far cry from multiple years in other states. So just making sure you understand that before you buy that note, you can check with a local attorney and have them review the note and say, is this something that is enforceable, first of all? And if we do end up foreclosing on this, especially in the case of a non-performing note, then what does that look like? What's the process? What do you need from me? How long does it take generally? And they can fill you in on that kind of information. So this is just a short presentation, but just to say notes are not just super easy and everybody can do it and rainbows and lollipops. There are real issues and there are real challenges. So make sure you understand what you're doing or working with somebody who does. And that's all I've got for that. And just wanted to go over some of the potential issues. Make sure you understand what those are.
Thank you. That was short,
Yes,
but I still have questions.
please.
So you're buying just performing notes now. You're not buying non-performing notes.
Non-performing are a lot harder to find, first of all. And then the pricing on them is not as advantageous as it used to be.
Profitable.
Yeah. Yeah. So
Oh,
they're just, yeah, time. And we'll see. I think we're starting to see cracks. We're starting to see, foreclosure rates are going up and default rates are going up. So we're starting to see some signs of another downturn and another wave. And how big is the wave of defaults? I don't know. And how long is it going to be rideable? I don't know. But I don't think 2008, but a rideable wave for sure.
you think that's because of the people went into that adjustable rate and that put them in trouble?
I think that's part of it. Yeah. And I think inflation has really taken a toll. That being said, there are so many people are locked in at really low rates. And so that alone, I think, will curtail the severity of the downturn. Most people are just going to hunker down and stay in place because their payment's really low and they're not going to do better. So I think a lot of people are just going to stay.
Yeah, I mean, the rates went all the way down to 1%.
Yeah. Yeah.
Not oh one, but I think I saw 1.96, which is almost two,
Yeah.
but
Yeah. Yeah.
still. So what you brought up, well, you brought up a couple of things. Oh, does anybody, before I bogart the whole thing, anybody have any questions? Oh, Jonna.
Yeah, and we don't have a raise hand button on here today, but
Oh, that's
so,
funny.
so Nathan, is this so if someone were to talk about the taxability of investing in notes, is this go consistent with other real estate investments where can you self-direct a Roth? Because this is interest, right? Fully taxable.
Right. Yes, you can absolutely buy notes with your Roth IRA and self-direct it and buy up as many notes as you want in your IRA. And it's a great investment for that kind of a thing.
Okay, and then if you buy it outside of an IRA, as the cash flow comes in, is that split between return of capital and interest?
Yes, and you got to find the right accountant for that. Because a monthly payment that you're receiving is some interest and some principal. So, technically speaking, it's both. And so if you've got the right accountant that can split that up, that's going to be your best bet.
Okay.
Yeah, it's called an amortization table.
Mm-hmm.
Do you send that out when you get the note? Do you send the amortization table to the client?
To the borrower, the one
Yeah,
making
the
payments.
borrower, the ones on the house.
I don't personally, but my servicing company does. Yeah.
Okay.
Yeah.
And then you had earnest investing. Is that a fund?
Yes.
And then at the end of the year, do you send out tax reporting that shows how much?
We do K1s. Yeah. So we do an 8% annual return, and then we do a K1 to show you what you've earned.
Okay, thank you.
Yeah.
Oh, that's it? Okay. So my questions are of a different nature.
Sure.
One was about the language in the note.
Yes.
From whom are you buying this note? Is this a bank you're buying it from, or is this another, sell person who created, you know, like it's
Yeah, more often
buying
than
it
not today, it's more of the seller finance. So these
seller
are like
finance?
individuals who sold it. And I've seen, a note on a property that's one page long. Well, that's definitely not sufficient. I guarantee you're missing terms and conditions in there that should be in there. Um,
Well, there's a promissory note and then there's a trustee.
Depending on the state. Yeah.
Oh, depending on the state.
Yes. About half the states are trusteed, half are mortgage states. So it depends on which one you're in.
Some states have both, I noticed.
Some do. Yeah.
Which is crazy. Why would you have both?
Yeah. I don't know.
So they wrote their own language. And can you, before you buy that, rewrite the note so that you don't have a problem in the future? Is that
Yes.
possible?
Almost all paperwork problems are solvable. Almost all. So if I look at, and I've got a one-page note that I know is not sufficient, um, first of all, I'm probably going to offer a bigger discount because there's more work for me involved there and more risk.
Sure.
And then I will go back to the borrower and say, okay, here's the thing. This doesn't protect you. It doesn't protect me. So let's redo the same documents. We can keep the terms the same if that's what we need to do. That's fine. Keep the terms the same as far as like payment amount, interest amount, time. That can stay the same. And then we do like the proper loan document that has all the other terms and conditions there about, in case of non-payment and blah, 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 blah. The other 8 pages that should be there.
8 pages. always too many pages for me. I found my parents' escrow purchase agreement on a house that they bought when we were moved into Redlands. And it's
Yeah.
one page, just at
Yeah.
the top, it's pre-printed with a blank of what the purchase price is. And then it's on a legal sheet, and everything else you would have to write in.
Yeah.
Nothing like what it looks like today.
Yeah. Yeah.
Incredible.
Oh, those are the good days.
And then you negotiate with the house owner before buying the note. Oh, yeah. So this is really meant to be a question.
Sure.
So when you're running title
Yes.
and you see all the liens, like you said a water lien, which I've never seen before, but a water lien of $6,000, do you then, before you buy the note, do you meet the owners of the home and find out what's going on, that they've got liens sitting there above the mortgage?
Yes. Yes and no. So before I buy the note, I don't really have the right to talk to the borrower, but I can talk to the seller and say, okay, I found a $6,000 water lien. What's that all about? And say so. And it could be the case of the person's not making the payment, paying the water lien or the water bill, or it could be that that's supposed to be included. Well, that'd be a little bit weird. No, I guess you wouldn't do that.
In the taxes?
Yeah, that would be more for like property taxes, but property taxes should be included with their monthly payment. So is that the case of the note holder was not paying the taxes in that case, or just try to figure out what's the issue? And
What?
yeah,
Yeah, well, you're trying to find something out about the owners and how they came about. So if it's a seller carryback, they might not know the buyers at all, really. They just right? They bought the property and the seller said, I'll carry the note.
yeah, more off. Well, again, it kind of depends on the mom and pop seller carryback where they've just done it once. They very likely know the buyer, they know the borrower in the house. When somebody's doing it as a business where they're just acquiring property and selling on terms and selling notes, less likely. In that case, they probably don't know the borrowers.
Okay. And then that brought something else up that I forget right now. So yeah, 20 to 30-year notes. People keep them for that length of time? They don't go do a refinance?
Yes, it really depends. I've seen them run out the whole length, and then other ones pay off early because they moved or who knows, whatever reason, they pay off the balance for this reason or that.
Oh, so then they're free and clear.
Yeah. So those do happen. And honestly, if they pay off, let's say it's a 30-year note and they pay off after 10 years, fantastic. Then we're actually doing a colleague and I are doing a podcast about that here in a few weeks about what happens if your buyer or if your borrower pays off early, and your rate of return just skyrockets. So it's a good thing. So I encourage that, and I say,
yeah.
refinance with the bank.
Jimmy would be thrilled about that.
Yeah.
He showed us how that worked when I took his course. So
Good.
Eugene's got a question here, or he's got his hand raised anyway.
Yeah. Do you use the same service provider for all of your deals, or do you have multiple?
I like to use the same servicer. Right now I'm using Madison Management.
Madison Management. Okay.
I've kind of looked around some other ones. There's a friend of mine down in Texas. I would love to go over to him, but he only serves Texas right now, and I've got notes in other states. And it's just way easier to keep everything together if I can.
Madison Management. I asked because we're working on a deal and I need a service provider. So Madison Management. Thank you.
Yeah, you bet.
Is your property in Texas?
No, it's in Illinois.
So
Illinois.
can't
Okay.
use that guy.
Yeah.
That's good. So people do pay their notes up, but they pay the note off. They don't go do a refi.
I've had it either way, where I had one a few years back where I think they were like at a 9% with me, 9% interest rate. And at the time, the bank was offering 4. So I said, I showed him an amortization chart with me and what it would look like at 4% and said, so I think it'd be a good idea if you went and refinanced. And so he did and paid me off early and fantastic. That's a great situation.
Okay. That's great. Then you need to go find another note, but you got the money to do that. Plus you
Yeah.
made a lot of money on that when he paid you off.
Yeah.
Yep, that's a big deal. And do you change the amount? You do a straight note, right? So it's a fixed rate, like 9% for the whole 20 to 30 years.
I do, yes. The adjustables exist. I don't want to do the math.
Oh, yeah, and there's that part too. Plus you have to give them that statement every year for
Yeah.
for
Yeah.
tax purposes. Oh, yeah,
And
dude.
the servicer would do all that, but it's just easier for me in my calculations to keep it the same.
Yeah, I can't remember what my other question was about the homeowner, the house. Yeah, the liens, always a lien. And you did talk about your expo.
Yeah.
Oh, you had it earlier this year.
Yes.
You're still gonna do another one, right? 'Cause I heard so many good things about it.
Yeah, we do it once a year. We've moved up the date slightly. We have been doing it the first weekend in June, and now it's going to be the first weekend in May.
Okay, and
That's
Tennessee again?
yeah, back in Nashville. Beginning of May, one of the major reasons is last year or this year, I should say, we missed our oldest daughter's grad banquet.
Oh,
Not her actual graduation, not her prom, but we missed like for some reason they did a banquet a month earlier than the graduation. And we didn't know about that. And so we missed it. And so we thought, we're not doing that again. So we moved up the conference.
yeah, those important dates for children.
Yeah.
While you have them.
Yes.
Yes, now she's gone, right?
One's out, 2 more to go. We'll see.
Where off do they go to college? Do they stay in this in
No, they want
Canada?
to, no, they want
No.
to go the expensive route. So there, so far, one's in Utah. Another one just applied for a different school in Utah. And then our third, so far he's talking about going down there as well. We've got other family down there, so I think that's part of the attraction, but that's fine.
Okay. You
So
didn't
it's
tell them they have to work their way through college?
the deal is we'll pay tuition, they pay everything else.
Oh, cool.
And then that's how that plays out. So she's like, yeah, she's working at Chick-fil-A and barely scraping by, and that's perfect.
Perfect. Right. That's one way to learn about money and how money
Yeah.
works, right?
Yeah.
Yeah, that's good.
But she just actually today in the mail came her scholarship for that she got for her high school grades. So that's fantastic. That'll relieve a lot of pressure for her.
For you, right? Because that's her.
We said the scholarships are hers. Any grants
Oh,
we'll keep because that goes
right.
towards the tuition. But yeah, scholarships she gets to keep.
Well, good. Congratulations on having a brilliant young lady.
She's a good kid, really good kid.
Good. Glad to hear that. Clarence, you have any questions?
You're muted, Clarence.
No questions. I did tune in a little bit late. I tuned in because Nathan's speaking and I've heard him once. I've talked to him a couple times. We talked about doing some business. He's in Canada. You know, it's a little bit different, but Nathan, you're looking good. You're looking
Oh, thank you.
healthy. You're looking healthy. You're looking good. You're probably working out and hitting the tanning booth or something.
I think it's just the lighting in the room, but thanks.
You're welcome.
Yeah, well, yeah, Zoom has pretty good cameras, I guess.
Yeah,
They make
yeah,
people look really good. Then you go meet them in person, you don't recognize them.
yeah.
Don't look like that person on Zoom. Yeah, I met somebody the other day for breakfast and I was like, I only knew her because I knew her shape.
Uh,
Had to look twice to see that it was her, like, oh.
yeah.
And she's not near as tall as I thought she was because we're always sitting, you know?
Yeah. Yeah, you see from here up and that's it.
Yes. So is your expo just one day or is it 3 days or
It's 2 days,
okay?
2 days, and the night before it starts, we do an axe throwing tournament. So
Oh
it's
yeah, I could remember that.
2 and a bit.
Ah,
But yeah, it's a lot of fun.
not dangerous or anything.
Yeah.
Yeah. You guys. Okay, good. Well, that sounds like fun, I have to say. And what difference does it make investing in notes with someone that's out of country when they're investing their money in the United States? Because yes, you are in Canada. You guys
Yeah.
have different tax things than we have. And I know Canada kind of tax you more, but if you're giving the money back, they can't tax you on that money.
Yeah, actually, my fund is US based. Everything actually is US. So as anybody who comes into the fund, you come in as a limited partner into the partnership, and it just goes through your regular US everything.
Oh.
The Canadian part is just for me to deal with.
Nathan, let me ask this question.
Yeah.
Your fund, you're buying notes in different states, right?
Yes.
So at the end of the year, when you issue your investor the K1,
Mhm.
I mean, I'm here in California. So do I have to address those different states that notes are owned in? Or do I just have to worry about federal and state income taxes in California?
Just the federal and income, because so the fund is a Delaware
Okay.
limited partnership, so it's issued as a Delaware K1. That's it.
Is there income tax in Delaware?
No,
Okay. Okay, so you'd have to deal with federal. You'd also have to deal with state if your state has income tax.
Right.
But okay, thank you.
yeah, so you're still gonna pay income tax
In California, yeah,
California
Yeah.
right,
because you're not exempt.
right.
Well, they get you here. What can I say? They do, they do. Yeah, so I don't have any other questions.
Okay.
Do you have any questions? I know you came in late, but this is about notes, and I don't know if you've ever bought any notes or sold any notes.
Are you talking to me, Peggy?
Oh, I was talking to Mike, who
Oh,
came in
sorry.
late.
Oh,
He
sorry.
came in really late,
Okay.
so didn't know. And Paul, do you have any questions? Have you ever invested in any notes or thought about it?
I have, no questions for right now. Thank you.
You have what? Thought about it or invested?
I have invested, so, but for right now, I don't have any questions. Thank you.
Do you like the performance of the notes that you have?
I do. I think, 8%, like Nathan, no offense, but 8% is a pretty conservative number. I know that you're doing all the work and managing all of them. There's some other organizations that, maybe focus more on non-performing notes, which I know are riskier, but they wind up, I think, the ability to garner higher returns is available potentially in those sorts of situations. So
Yeah, definitely. Yeah, there's definitely higher returns to be had in non-performers. It's for me, the ultimate question came down to predictability and just kind of the security behind it. Because I've done a lot of non-performing notes over the years. And when we looked at the fund model, I wanted to make sure it was that predictable, safe kind of investment. So it definitely, it's not for everybody. This is definitely something for the passive investor that just wants to sit back and relax and not think about it. That's really who it's designed for.
I guess I get, one of the things that you mentioned when you're talking about kind of the predictability then, which is important. In your fund, are there quarterly distributions, monthly distributions? How does it work? Are they ACH right into my checking account? How do you do it?
Yeah, great question. So yeah, it's quarterly distributions, and yes, it's a ACH straight to your account.
Great. That's very convenient. Thank you.
Yeah, good.
Thank you, Paul. We enjoyed your participation. So what can we call it now? Because it's no longer mailbox money. What's another word we could, I mean, mailbox money sounded so great, and yet it
Yeah,
would be
another-
mailbox, but you don't even have to go to the mailbox anymore. You just have to open your checking account and look to see if the money's there.
It's a good question. I got to think about that. What do we call that instead?
Easier than mailbox money.
Easier,
Easier mailbox?
easier than mailbox. I was thinking streaming income.
Mhm.
Anyway,
Nathan,
we'll have to throw that in AI. It'll come up.
Yeah, yeah.
Yes, Clarence.
I was gonna ask Nathan, when he is going to do more of an equity participation fund, which, maybe the timing is nowhere near now. I know back in 2009 and 10 and 11, there were
Mhm.
groups that were buying tranches or portfolios of loans,
Mhm.
and they were working them out. And then this was providing a chance for someone to come in as an equity investor.
Yeah.
And it wasn't your guaranteed 8% deal, but usually the expectation was better than that.
Yeah.
But it took the pressure off the promoter, because if it didn't work out, it didn't work out. But if it did work out, everybody made a lot of money. Do you see
Yeah.
that in the future?
Possibly. That's what I did up until we put the fund together. And I enjoyed it, but yeah, it was more that predictability that was just a challenge, because I guess I didn't want to ever let anybody down, and sometimes the deal didn't go so well, out of anybody's control. But if it doesn't go well, that's not a conversation I like having.
Yeah.
So I'd rather go for the one that I can accurately predict and just say, yep, everything's great. It's exactly what we thought it was going to be. Here you go. The other thing is the marketing conditions would have to change, where it would need to be more non-performers out there. With the performers, there's not really any equity to split. There's no upside to a performing note. So we would have to have a significant shift in the market for the worse, for the non-performing note investor for the better. And that would have to happen before that kind of thing could be offered again. But that's a good question, though.
Your current fund, are you investing primarily in first trustees?
Yeah. First lien, anything that's first lien, and residential.
How long are your investors required to commit to?
That's actually, we just changed that. And in fact, I need to update. I've got a different webinar that I send out automatically that I need to update. But we just changed that. It used to be like a minimum 1 year. Now it's much more fluid. If you decide you want to take your money out at any time, that's fine, as long as we have available capital. So the only potential time constraint on that is, you tell me you want your money out today. If all of the money is tied up in notes, I'm going to have to sell a couple of notes before I can get your money back. So that could take, 30, maybe up to 60 days.
Thank you.
Yeah.
And people want to get their money back? Is that what's happening and the reason you
Yeah.
changed that?
Yeah.
'Cause they can
Yeah.
wait a year to get their money back?
Yeah, if they want to get their money out, because I don't know, for whatever reason, I guess, yeah, that's fine, but it might take a minute for me to sell a couple of notes and get your capital back out of it.
Okay, and then who do you turn to sell your notes?
Usually other note investors, typically.
Right.
I can sometimes back to a bank, but most often other investors or myself.
Banks buy these performing notes, huh?
Yeah, yeah. Yeah,
you sell
on a
to
regular
American
basis.
banks or Canadian banks or
No, US. Yeah.
US? So you stick to US for that.
Yeah.
Okay.
Nathan, did you ever sell any notes to First Republic?
I did. Yeah. They're great payers. They pay really well. The hang up with those guys is they want the credit score to be really good, which is kind of ironic because if they had a good credit score, they would have gone to the bank in the first place.
Right.
And so that's often the challenge with those guys. But when it works, I've sold several notes back to them and
Did
they do really
someone, I forget who took over them, but do you know if they're still buying notes, the
Yeah.
new group? They
yeah,
are.
they are. Yeah.
Who took them over? Was it Chase or was
Um, I don't know. It's been a little while since I've done that, so that's a good question. I'll have to reach out and see who's
it's
there.
it's sort of ironic that they went under
Yeah,
because they bought T-bills.
yeah,
And I couldn't figure out why they bought T-bills at such a low yield when they seem to have, I mean, their playbook was to buy a lot of existing notes, but I guess they had more money than notes.
right. Yeah, yeah.
It's a small company called Fulton Bank.
Oh, okay.
That took over First
In
Republic.
April, not too long ago, April of 24, acquired the assets and deposits of Republic Bank.
That's First
Yeah.
Republic. I think that's,
Yeah, which was First Republic.
okay, that was First Republic. Okay.
Yeah,
I thought it was
Fulton rings a bell.
I thought it was a big group, but anyway,
But this just happened because that was over a year ago with First
Okay.
Republic going
Mhm.
on. So somebody could have taken that over and then this company just bought it. It's only had $2.9 billion in loans
Hmm.
and a $2
Yeah.
billion investment portfolio, which isn't that big for banks. Big for
Yeah.
me, but not for banks.
Yeah, yeah.
that was good Google work.
Yes.
Sorry?
Did Google work? Yeah, Google worked.
Oh, that's great.
Have it all the time. Well, we are so happy you were here.
Yeah, thank you.
We will come back again because things keep changing and you're
They do.
changing yours. And maybe you could come back right before you have your expo.
Yeah, that'd be great.
And we'll get some of that information out to people. They
Sure.
come on the show. Well, we do put this on Facebook and LinkedIn and Instagram and a few other places. So we do our best to get the word out. And
Okay.
YouTube, of course. And then you'll get a copy of this also, which you can split up if you want. We haven't started doing that yet. Mike,
Okay.
you have any comments to make on anything about notes? Just dropped in. Oh yeah, our napper didn't show up today. We have a couple people that show up and take a nap on our show. It's always fun. Okay. No other questions? Well, thank you very much, Nathan, for being here, and we will see you. And I guess that would be April, huh?
Yeah, sounds great.
Okay, we'll get an invitation set up so you
All
can
right.
go ahead and schedule early.
Perfect. Thank you.
Congratulations on your children too.
Thanks.
Bye.
Bye for now.
Thank